Hey there! Welcome to SaaS Unbound, brought to you by SaaS Group. I'm your host, Anna Nadeina, and this is the show where we talk with inspiring founders and experts to get a scoop on how they made their business a success. And today with me is JP Peters, co-founder of bitsfordigits. And bitsfordigits is a micro private equity marketplace connecting owners of successful online businesses with acquirers. And today we're here to talk about their fascinating founding story. Welcome, JP.
Thank you so much for having me, Anna.
It's great to have you here. I've heard a lot about you and about the platform. So let's start a little bit with your background, maybe.
Yeah, sure. So my name is always shortened to JP because really it's Jan Philipp, and I think most international folks have trouble pronouncing that. So I'm from Germany. And yeah, my background is in business. So I studied business and economics. Afterwards, moved to Ireland, worked for two American tech companies. And then about a year and a half ago, my co-founder and I, who met in college, decided to quit our jobs and dive into the deep end of the startup world and co-found bitsfordigits together.
That's interesting. It's a very uncanny choice. Like, why go to M&A? why doing this kind of platform?
Yeah, a very, very good question. So my co-founder is more from the finance world. So he worked for a big American asset manager. So he sort of had the finance expertise. I more like the tech side of things. So we felt like, okay, fintech it might be a good avenue to go down. But then, of course, we had to figure out, okay, what sort of ideas are worth exploring? What sort of white space is there still to be discovered? And the original idea for bitsfordigits was a blog post that we read, written by David Heinemeier Hansen, which is one of the co-founders of 37 Signals or Basecamp. And what they did way back in the day is they bootstrapped the company and eventually wanted to just take some chips off the table. And then did a minority buyout with Jeff Bezos, where basically Jeff Bezos bought a piece of their business and a secondary transaction. So the two founders of Basecamp sort of had like a nice cushy net to fall on in case Basecamp should ever like fail. And then Jeff Bezos, I'm sure at this point is a rounding error, but gets to participate in their dividends and their company success, basically into the future. And we thought this is a super, super cool transaction. And we saw that there's a lot of marketplaces in the like startup M&A world, but there's none specifically focused at these partial buyouts. So that's where we started. And we were fortunate enough to speak to David about this transaction. We figured out like how all of this actually worked from like a mechanical perspective. And he also mentioned that people keep coming to him because he wrote this blog post and said like, I'm interested in doing this too. Like, how do I do it? And we thought like, okay, that's a great opportunity to build a marketplace around it. So that's how we started. Today, bitsfordigits also does full acquisitions. So we expanded a little bit from that, but that's how we got started.
That's a very interesting story. And honestly, I haven't heard a lot of stories where it was a partial buyout, but the way you describe it is actually even better than just selling your company, right? So it's not exactly going after VC's money and then shooting for some kind of hyper growth just to make sure you grow the way that your investors want you to. But at the same time, you have, right, like you said, a cushion to fall onto. So what are the disadvantages? Why aren't there more deals like that?
So what we learned also the hard way is that there still needs to be a lot of education to be done in the market, because when we speak to founders, especially of these like small like SaaS businesses that are like very profitable, somewhere in the high 6 to low 7-figure range in revenue, like everyone knows fundraising and everyone knows selling their business, but the sort of like space in the middle, these secondaries, like people are not super aware of. Right? And that's a bit different if you speak to, for example, founders of big VC-backed businesses. because secondaries are like fairly common, I'd say, in this point in like the Series B and onwards, while for the startup like startup space, like more SMB space, it's not very well known. So when we started out, we knew like a lot of investors were like comfortable with this, but then approaching a lot of founders, they were like, what are you talking about? And then we first had to explain it to them, and then they're like, okay, this actually makes so much sense. But of course, from that point onwards, where they understand what this actually is, then they need to consider, does this fit into their life plan and so on. So I think we were just like, that's sometimes the woes that comes with being the first. So you have to teach people what you're actually doing.
All right. And um, did this create some kind of a friction with the audience that you're trying to reach? So is it a lot more difficult to reach them just because of this educational point, or you're doing something, maybe writing articles and going to events to educate them?
Mm. Yeah, it's a lot more outbound than inbound, I would say, because I think what you can do is, for example, with a traditional M&A marketplace, you can write, I don't know, content that is all about selling your company. And then people that already know about selling your company, Google that stuff, find you, and that's sort of how you acquire those customers. But what we were doing, there was very little search around what we're trying to achieve. So we were like engaging with a lot of communities of these founders, and then also doing like outbound, like cold emailing, like messaging people on Twitter, like engaging with like different niches of the internet, basically. And then speaking to the founders, like trying to interview them, and then trying to sort of get our message across. But yeah,
Okay.
there's a lot more
And
friction.
right. But you said that you eventually moved to full buyout. Why did that happen? Was it audience driven?
So we do both, right? So at the moment, I'd say we're fairly split 50-50 between partial buyouts and full acquisitions. And the reason why we ended up including full acquisitions is because a lot of the buyers on our platform told us like, hey, we're also doing full acquisitions here, right? We also want to buy entire businesses. And we were very single-minded for a long time, where we felt, okay, a startup can only be successful if it's very, very focused. And at some point, we were just shooting ourselves in the foot, to be honest. Like our buyers were like, hey, we're also interested in this deal flow. And we kept rejecting full business acquisitions like those founders and sending them to like other marketplaces saying, you can do that there, but not here. And we then eventually said, okay, maybe this is not too bad. Onboarded them as well. And I think that has also done a lot of growth for us. And it also allowed us to then tap into additional like customer segments that are only looking for full acquisitions. So I think all in all, while it has like muddied the original message a little bit, I think a little pivot wasn't too bad.
Okay. You mentioned onboarding. So, how does it work? Basically, when you acquire a new user,
Mm-hmm.
because I shouldn't say customer, right? Because you're not getting paid from the businesses that are listed, right? You're paid by acquirers.
Exactly. So the
Yeah.
way we monetize is we charge a subscription fee to buyers, right, or acquirers, as we call them. So they have to pay a subscription fee to message with founders on the marketplace. And you're right, founders, the users, they don't pay anything. So there's no commission fee that we charge them, no listing fee, nothing. So they can just sign up to the marketplace and list their business. So what usually happens is they sign up. Most people just have a look at the marketplace first. We display anonymized, like who are all the different businesses that are currently live, and also who are the buyers on the platform, right? So you'll see so anonymized, like private equity firm, search fund, family office, that kind of stuff. And what they can then do is just list their business. So they basically just have to fill out a long form about their business, submit it to us for review, and then we check, like, does everything make sense? Like, double check the numbers. We're in contact with the founder, like, hey, do you have a P&L in order? Like, can you maybe prove some of these numbers? Is everything anonymized correctly, right? We want to protect their identity. And then we publish their listing to the marketplace. And once that happens, other acquirers can then see it and approach the founder, and then the acquisition talks kind of go from there.
Okay, so it's a manual verification. So you actually
Yeah,
go and do it yourself. Oh, wow.
yeah, it's a it's a decent amount of work.
Okay. All right. So how do you make sure that the businesses are legit? So basically, how do you protect both buyers and the sellers?
Yeah, there's a lot to it. So we obviously like check that you can only sign up from the domain of the business that you're actually trying to sell. We ask for like a lot of documentation, right, to prove that the numbers that were given are correct. We usually do calls with the founders too, right, just to like check their identity, because I think it's a lot harder to fake that kind of stuff. And on the acquirer side, it's like somewhat similar. What we do is like we check their LinkedIn, we check the URL that they signed up from. Are they like a reputable person? And we might do proof of funds somewhat soon, but usually that hasn't been a big problem.
Okay. Have you ever had to reject a buyer or a seller?
Oh, all the time, all the time.
Okay.
So for every business that lists, we reject like 4, I think, at the moment.
Okay.
Yeah. So it's either like we're not super certain this is right, and we know from experience, having looked at other marketplaces in this space, like some have a reputation of like scams and fraud, and that like even if they solve those problems, that reputation sticks. So we don't want to be that marketplace. And on the buyer side, I think some people are just not very serious buyers. And well, we want to make sure that when people sign up to our platform and they speak with founders, that there's actual like intent behind buying a business. And sometimes we have competitors also signing up to our platform and like saying, how about you move to our platform? Those we're also trying to avoid.
Oh, okay. Sneaky.
Yeah.
All right. So let's get to the founding story. So how you actually built it. And I remember I read an article with you um, that it's all no code. Yeah, tell me
Yeah.
more about it, because just yesterday I was talking to Jeff Roberts from Outseta, and he said that no code is
Oh,
the
cool.
most underrated trend in SaaS right now. And amen. I mean, 100% agree. So, how does it work for you?
Yeah. So when we started out, we hadn't built anything yet. What we started doing is basically interview a lot of potential investors, trying to like really narrow down like who's the buy side for this. Spoke to some founders, and once we felt like okay, we had like quote unquote validated that there's a market here, we then were sort of approached by a lot of venture capital firms, and we thought that's also the route that we have to take, right? Neither my co-founder nor I are developers, and we thought, okay, we probably have to like raise some money, get some developers in here, build this stuff for us. And then we had some friends that had built stuff in no code before, and what they said is like, hey, try this out. Maybe you can get like a super quick and dirty MVP going. So we're like, okay, let's try that out. And it worked like surprisingly well. And then we just kind of kept on going with it. And so far, so good. So, I mean, the learning curve can be a bit steep. And in hindsight, maybe I would have chosen like a few different no code tools or a different stack from time to time. But basically, I think there's a limit for what no code can do in terms of SaaS. But I think what it's great for is like software and a service, where like it's half like software driven and half of it is maybe still like manual. That I think no code is fantastic for.
Yeah, I completely understand what you're talking about. I think no code has limitations, not restrictions. And as long as you're ready to learn and go a little bit beyond that, uh, it's still sustainable for a pretty long run. So, what tech
Yeah.
stack are we talking about? If you can share that.
So yeah, for sure. We built everything on Webflow. So if I were to do it again, I would probably use Bubble instead, because Webflow is great for building like beautiful designs, but it has a lot of other limitations. So what we had to do is like plug in like 9 other tools to make the marketplace work like the way it's currently working. And I think it would have been a lot easier to just use a bit more advanced tool like Bubble to just build it all in one platform. But yeah, it's Webflow. We use Member Stack for authentication and like user management. I think that's a bit similar to Outsita. Yeah, Stripe for our billing. Everything works like sort of automated on Integromat, or I think it's called Make.com now. And then there's like a bunch of other tools that do like the filtering and the chat and that kind of stuff.
Okay, so you ended up taking VC's money,
No.
and okay, let's
Yeah,
get
no.
back to that.
Yeah, no, exactly. So we initially thought we had to, and then we sort of just kept going, kept building out the MVP, and we thought like, okay, like we we don't maybe we're about to like it's a bit hubris, but we wanted to just see how far we can take it without raising venture capital, and it just kind of kept on working. So we're like, okay, let's build a product first. Okay, let's maybe get some transactions. Okay, let's maybe make some revenue. And it all worked sort of bootstrapped and with this no-code stack. And I think now the time for venture capital is also not the greatest, to be honest. And to be honest, I'm also not sure that money at this point is necessarily the thing that makes the biggest difference. So I think there's other players that have raised venture capital that are doing fantastically, but I also know of some that raised venture capital where I see it made very little impact. So I think maybe we've chosen the right path here. And yeah, maybe we'll raise in the future, but I think for now it's going pretty well the way it is.
Okay, that's great. Well, what has been the biggest challenging bootstrapping so far?
I mean, what I hadn't really anticipated is how difficult hiring is. So I was involved in hiring in like the companies where I worked before, where they had big brands behind them, and like a lot of people would apply. The salaries were great, and then you just like have to like make the difficult choice of who's the greatest to pick here. If you don't raise venture capital, you have like no brand, and you can also pay very little money. That becomes difficult. So we've had to interview a lot of people to get to like good candidates that were like confident in hiring, and the convincing you have to do is also a very different task, right? You have to sell people on the vision, sell people that this is actually a good company, that not raising venture capital at the moment is the right choice. So I think that's something I definitely underestimated.
Okay, and how big is the team right now?
So at the moment we're 4. So yeah, it's my co-founder and I, and then 2 other people, and then we usually have a revolving door of interns.
I think that's a great strategy. So let's talk about customer acquisition a little bit. So at first you mentioned that you went to startup communities. So anything changed right now, or is it still your primary source of customers?
So when I look at our attribution, I think we're very fortunate in that we have a fairly large chunk of word of mouth at this point, because I think these communities are also like small-ish enough that word travels fast. And we've also now been around for long enough that people sort of recognize us. Outside of that, yeah, it's definitely still like engaging with communities, and sometimes that's sort of like we used to be very active on indie hackers, for example, and then we felt like okay, we reached everyone here, and we didn't focus on it for a while. Now we might be like going after that again. Maybe the users have changed, or now they're in a place where they're actually looking for acquisition. It's Twitter. It's reaching out to people directly, sort of like SEO. But it's a fairly broad mix, and also about the two sides of the platform. It's a bit different. I would say like Twitter is better for founders, acquiring like the one side of the platform that's business owners, and for the buyers, it's more like just approaching them by email, for example.
Okay, that's an interesting insight. What are other trends that you see in the industry right now?
So what I think is super interesting right now is VC-funded startups that can't raise follow-on rounds that are looking for some sort of alternative, and that can be an exit. Because we've been approached by a few of them before, and we used to have this rule that you have to be profitable to list on our marketplace, because I think that's also at the time what most of the buyers were looking for. And now we've heard from more and more buyers that they're actually interested in acquiring like a VC-backed startup and sort of right-sizing it into an SMB, right? They're moving it from this giant growth trajectory to a smaller internet business. And I think a lot of the hard work has already been done with the VC funding. And we're slowly starting to onboard some of these businesses. So I think that is a cool trend. On our marketplace, we have yet to see any actual transactions of that. So I don't know how well that goes. I also assume it's a bit more difficult if you have a cap table that's not only founders, right? You have to like sort of buy out the VCs, how much is actually left for the founders, that kind of stuff. But that's something we're seeing at least a lot more interest in from both sides of the platform.
Right. Oh, that's very interesting. I just saw this article that's talking exactly about what you just said. That there are a lot of founders, a lot of businesses that got the capital at first, but then they cannot raise anymore. And I think the question there was like, what to do now? Do we go bootstrapping? Do we sell? And it actually says that why not bootstrap at this point? Like you have already some recognition, you have some growth, so you have some kind of foundation that you can still work on, but you don't have this unrealistic goal set up by your investors anymore, so you can just focus on a very sustainable growth and go from there.
If founders can do that, I think that's great. I think it's very hard. Also, like not only from like switching the mindset of like we're shooting the moon here to now we're going to become an SMB, but also you probably have to lay off a lot of people, or you have to like really scale down your marketing, change your roadmap, that kind of stuff. So I'm sure it's hard, but I think it's also a cool opportunity to just build something that's maybe worth saving as opposed to just shutting down the company.
Right. So I think it's a great change in mindset. So if you wanted to go for this hyper growth from the very beginning, I think it's difficult to go back to just growing a little and just making sure your cash flow is there.
For sure.
Okay.
For sure.
So what are your success metrics for Bits for Digits?
So our KPIs, revenue is our cash is king. But what we look a lot at is like marketplace liquidity, right? So a marketplace is very much driven by network effects, especially a two-sided marketplace, where there always needs to be enough founders on the platform willing to sell their business, and enough buyers actually like interested in buying them. So what we sort of look at as a key metric for us, like conversations started. So when we have a new business list on the platform, we want there to be X amount of new conversations started with that business, right? Like existing buyers, new buyers, approaching them and sort of starting a conversation. So that is the key metric that we look at also in terms of where do we focus our customer acquisition? Do we focus more on acquiring new business owners, or do we focus more on acquiring new buyers, basically, or converting them to the paid plan?
Okay. Do you have any success stories to share?
Yeah, sure. So, I mean, we don't reveal any of the businesses' names that we have on the platform, right? They're all anonymized, but we've had a few like nice transactions so far, also across the spectrum of different transactions. So I think the first one that we had was a marketplace for remote workers. So there's a lot of people that are looking for these virtual assistants. This was also great during COVID, right? Got a lot of remote workers from like different parts of the globe, and that was our first like minority buyout. That was very cool. Like an email tool that was the first full acquisition for us, where someone basically just aggregated all of your newsletters into just being sent to your inbox once a week, as opposed to it trickling down into your inbox all the time, and you sort of get lost. But then there's also like, and to be honest, that's like half the fun of the job. It's like seeing new businesses list on the platform. So there's also some cool ones where I'm like, I'd love to buy that at some point if I weren't doing bits for digits, or like crazy niches. Like we have a business on the marketplace that's a software business for a very specific type of animal breeder. And
All
this
right.
software helps people of that animal breeding type to sort of track their production. And it makes like six figures. And
That's
it's just
crazy.
crazy to me, like what sort of niche stuff is out there.
Right, right. When you talk about full anonymity, the first thing that pops into my mind that this is a completely opposite direction from, say, acquire.com, right? When they actually want the buyers and the sellers to go out there and talk about what kind of experience they had on the website. So why did you go in this completely different direction, protecting this information?
Um, so it's usually driven by the people on the platform, right? So most people sort of just say that they're not interested in sharing it. So obviously that's the case before the transaction happens, because you don't want your employees and your staff and that kind of stuff to figure out, oh, my boss might be looking for a full acquisition here. And after a transaction, we usually just like sort of ask them like, hey, how's it going? Like, do you want to share anything? Most people like, no. And
Okay.
that's just sort of it. But yeah, I don't know. I mean, maybe it would be a better marketing tool. Maybe we should be more after it, but it's not really worrying us too much.
Okay. All right. That's great. I mean, as long as it's it's driven by your customers and they're happy with it. Obviously,
Like
that's
we don't want
fine.
to like pressure anyone into doing anything they don't want to.
Right, that's true. So, what so far for you was the most surprising in building this platform, or just working in the startup world? Because this is the first venture.
Uh, what's most surprising to me is like who you can reach and speak to, and how open all founders are. That was very surprising to me. Like I think I already mentioned, we managed to speak to DHH, which was super cool. Like he took like an hour of a Zoom call with us. Um, we had a lot of like legal questions at some point, where we had to get a lot of like lawyers and figure out like how to build this into a really compliant platform. And we reached out to people, for example, like the founder of, or one of the founders of Scalable Capital, like giant like unicorn businesses, and everyone is like crazy helpful, and really it doesn't matter like how big you are or what value would provide to them. They're just happy to help other founders. And that to me is probably the most surprising and exciting thing about this, like who you get to meet and who you actually can like ask for help and they just offer it.
Yeah, that's beautiful. I completely agree with you. I've experienced the same stuff on the podcast. Okay. So my next question is because I hear it a lot, that founders usually build with an exit in mind. So do you have this plan for bits for digits, or do you see it becoming this kind of a dependable software piece and working on it for the next 15-20 years?
Yeah, I don't have an exit in mind, and I think it's also maybe a bit early to speak about this, right? Like we only started this somewhat recently, right? I think we we officially launched in December of 2021. So it's definitely a bit too early to consider that, I feel. And if we were to consider one, I mean, we started out as a partial buyout marketplace. Maybe that's a cool deal to also then follow through on, that we don't fully have to exit our company. But yeah, I have no plans on quitting quite yet. And
No,
I
just
also think, to be honest, maybe not the best strategy to build a business with like an exit in mind already. Like if you raise venture capital, obviously that's what you have to do. But if you're building like a bootstrap business, I think maybe you can manage to build a more high quality business as opposed to always just looking for the door. So I think the longer you stick to it, the more it can compound. And I'd always take like a longer view on building a business as opposed to going like, I'm going to do this for 3 years and then it's the next thing.
all right. You've reached quite a success over this 2 years, right? Less than 2 years even. So, how do you see yourself grow in 2023, especially since you were saying that VC's money is not as active anymore, so maybe there are less investors. So, how do you see it affect Bits for Digits?
So how I see myself grow is, I mean, I'm a lot better at what I do now than I was a year ago. And I'd like to look at myself in 2024 and think like, he was pretty bad at what he's doing compared to where I am now. So I just want to get better at what I'm doing here, be that sort of like managing, coming up with like better product strategy, customer acquisition, all of that stuff. Where see Bits for Digits going is, so we're running at very much break even at the moment. And I think that's just a good strategy. Like it doesn't need to be like super profitable yet. We have a lot more growth ahead of us, but I also don't want to necessarily depend on venture capital, especially at a time where it's not very favorable to raise it. So I think that's just how we'll do it.
Okay, sounds great. So far, can you share the biggest win and the biggest failure for Bits for Digits, or for you as a founder, if you, I don't know, want to reflect on your own journey?
So the biggest win, I think right out the, I don't know, it's so difficult to say. Right out the gate, I was very happy with our Product Hunt launch. So we officially launched on Product Hunt in December of 2021. We became second product of the day, only to lose to Nathan Latka, who became number one. But we were also nominated for like FinTech of the Year at the Product Hunt Awards. So that was very cool. It gave us a lot of like, validated us a lot, and it got us a ton of users right out the gate. So that was great. The biggest failure, I would say,
Or
was
challenge?
yeah. So the biggest mistake I would say we made in the early stages is looking at other marketplaces and trying to understand them from like a legal perspective. Like, are they regulated? Are they not regulated? What do we need to do? And we looked at other marketplaces, and basically none of them are regulated. And then we assumed like, we also don't have to be regulated. Wrong, or at least the way they are designed. So we spent a lot of time and a lot of money on lawyers to make sure our platform is designed in a way that we don't have to be regulated in any of our major jurisdictions, right? Not in the US, not in Canada, not in the UK, not in Germany. And that was a huge pain. Like, I hate having to deal with lawyers. And I think that was the biggest challenge and the biggest mistake. And I also encourage a lot of other marketplace founders out there to maybe look into it. Maybe get a lawyer.
Right.
Because so far everything has gone well. But like technically a lot of the stuff that I see out there is like not allowed.
Okay. Yeah, I feel like a lot of this like unsexy stuff, founders don't really want to touch at first, but then they understand that this is actually what will keep us afloat, what will give us some kind of stability, and just rid of
I
this pain.
I sleep a lot better at night now. Yeah,
That's good. That's
yeah.
good. Okay. I remember you mentioned there were businesses, really cool businesses that are listed on the platform. And my bonus question is actually somehow related. Uh, what would be a business that you would be investing in if you wanted to invest right now? Listed
Oh,
or unlisted? Anything that you'd love to have a piece of.
so I'm a big fan of what Andrew Wilkinson has done with Tiny, and I think he's just going public with Tiny. I think he's merging with WeCommerce or something like that. So I haven't looked at any of the numbers, but that is something I'm like considering because I think Constellation Software is an amazing business, but it's also huge already, and there's so many competitors that weren't there in like the 2000s. But I think Tiny is amazing. Like they're doing really well, and I am considering like buying a piece of that.
Okay, that's an interesting choice. Thank you for sharing. All right. Well, JP, it's been a great conversation. Thank you for sharing everything about Bits for Digits, and obviously, I hope to interview you again soon to see what badass things you were up to this year.
I'll have some updates. Yeah, thank you so much for having me.
Thank you.